The best way I could describe simplicity when it comes to trading is this. It's like a straight path through a forest. It might not be the most exciting, but it's going to get you where you need to go. As young motivated traders, we are so quick to try to find the next best strategy or the what if. But here's what I challenge you to do. What if you just took the time and you focused on one simple strategy, and you're going to become super consistent at it where you will no longer need any other strategy and you will be consistent enough to be profitable. What I teach you in this video is going to help you if you're a struggling trader or you're just struggling to find any kind of consistency, because what I show you here is going to be simple. There's 4 things that we need to focus on. The first thing is going to be time. Every day I look at one session, which is the market open. Something you're going to notice is if you're trading NASDAQ during the New York AM session, that's when we're going to get the most volatility during the day. If you look at any time between there, unless we have some weird kind of news, we're going to only have the most expansion during that time. So why would I focus on anything else? Now, what am I looking at exactly? Market open is at 9:30 a.m. EST, right? I don't trade until 9:45 a.m. EST. Why is that? Well, it gives price a little bit of time to set up. There's not going to be as much insane volatility. It's just going to be right enough where I could find a good setup. I only watch till about 10:30 a.m. EST, then maybe 11 a.m. EST at the longest, but that's it. So what does that mean for me? Well, anything that happens before or after this session is irrelevant to me. I block out all of the noise and only focus on this session during that time. So if something's going on in Asia session or London session, I don't even look at the charts. I don't even open up the charts. What's the point if I'm not going to trade during that time? So what other benefits does that give me? Well, it's going to give me a better mental capital. When I'm on the charts, when I'm trading, I'm going to have all of that mental capital just light, saved up. I'm not tense at all. I wasn't thinking about the markets before until I open up that chart at 9:30 a.m. open. So what does that leave me with? Well, it leaves me with the perfect mindset to execute with, and there's no other pressure outside of that time. Something else that all traders have an issue with, even myself at times, which I've gotten a lot better with, but it's going to be over trading. It's one of the most common issues upon new traders. They're constantly taking trades whenever they want, whenever they feel like it. When you should not be taking trades just when you feel like it. You should be only taking trades when it makes sense. Well, for me, it's only going to make sense to trade during New York AM session. Now, the second thing that you should be focused on is the higher time frame. We hear it all the time. The higher time frame rules the market. And if I'm being honest with you, it does. Like when I was trading just the lower time frame, you get so clouded and all of these thoughts, all of these things where you think price is going to go, but there's no real conviction outside of it. Without knowing the general direction of the market, you're just going to get caught up in that poor price action. So if we're able to hop on the higher time frame, we could create a plan around it, a bias around it, where we believe the market is going to trade through within that single session. So think about this. You have your session, you have your higher time frame, so you know when it's going to move, you know where it's going to move. So what's left? Well, we'll go over that soon, but this is just going to give us a framework on what we should be looking at when we're on the charts. Now, the third thing is going to be my simple model. Now, I could tell you all day, oh, you need to have the most simple model. It needs to be a few steps. Well, what's the point if I don't show you what it is? So let's look at the most key things about it, what I look at, and what you should be focused on when you're looking through my model, the lens of my model, which you can hopefully apply to yours. Now, every day I'm looking for these few things, which is higher time frame delivery, some kind of market structure shift, and some kind of fair value gap. Now, you'll notice right here, we have our higher time frame delivery. When we look on the lower time frame, we're going to see a market structure shift that is pointed out through these highs that we close above. And then we're going to have a fair value gap that is formed that is going to allow us to enter with good risk to reward. Now, those are all the things that you need for a simple model. So looking back and reviewing what we've talked about so far, you're opening up the charts. It's 9:30 a.m. EST. whatever time zone you're in, doesn't matter, right? We're a few minutes into the charting and we find our higher time frame bias where we know price is going to go. Now what's left? All that's left is finding our model. And that's how every day should go. It might sound boring, it might sound repetitive, but when you're making profits in the market like I am, it's not going to be so boring. Okay? Now, those are the 3 things you need to focus on. 4th thing is going to be conditions. What if I told you that you can have an A+ setup and it still fails? Well, this is true if the conditions are not right. This is the most overlooked aspect of trading. Now, what does this even mean? Well, we have 2 charts right here. One shows high probability conditions, one shows low probability conditions. And the easiest way to identify which one is the lower probability condition is if there's fair value gaps present. If there's a lack of fair value gaps starting from the higher time frame to the lower time frame, this gives us a heads up on whether we have volatility or not. And I'll be honest, this is the hardest part not because it's like hard to identify low probability conditions. Anyone can do it. The hard part is deciding whether you want to walk away or not want to walk away. And that's just the human aspect of it. You know, we're constantly looking for opportunity, and for you to step away from that, knowing that you might not have the odds in your favor, shows how disciplined you are. And I'll tell you, that's the hardest part about this. And the best choice in this scenario is just to close the screens, wait for the next session when you see a lack of fair value gaps. I hope you all learned something of value from here. If you did, make sure to hit the like and subscribe button down below. Trading does not need to be so complicated. I have created a simple system that has helped me achieve over $2 million of funding. If this is your first video and you just started watching me, then I'm barely scratching the surface. I hope to see you all in the next one. Have a good time.